Well then, welcome back to my investment portfolio channel. I'm going to be taking a look at the top winners and the top losers this week and talking about what type of news has caused them to move in the direction that they did. I'll also gander over my 4 pies, well 5 actually, but 4 main ones, and see how well they've been aligning with my expectations. So yeah, without further ado, let's get into my pies. So the first set of pies I have is here in my ISA account, where I can see we've made some improvements since the last update. The dividends pie is not as low as it was previously, but it is still in the red. That for me is kind of expected though, because the majority of it, or if not all the stocks I have in there, are kind of low volatility, low beta stocks that don't experience wild gains when the market does go up. I've removed Tate & Lyle from my dividend pie because after reviewing it again, I generally don't find them to be an interesting company that had a nice growth trajectory. I actually remember only investing in them for their dividends, so that was a mistake in itself in the first place. I'm also considering selling Cisco just because they've only been paying dividends for I think 10 years now, and I really want to invest in companies that have been paying for a substantial amount of time, just so that I have that confidence, you know what I mean? So that's still under review and I just haven't made up my mind yet. Apart from that, my other pies within this account are looking healthy. In terms of additional spending, I didn't make any substantial investments this week. I mostly did that in the 2 weeks prior. In my investment account that has very little money in it, mainly because I forgot I had it until recently, I have one pie which consists of 3 Chinese stocks, NEO, NIU and C Limited. And I mean, if it has NEO in it, then you can expect it to be doing well as of late. So yeah, those are my pies. And now that's done, let's take a look at my top winners. Digital Turbine reported Q2 earnings last week and they were beautiful. They beat EPS estimates by 4 cents, revenues more than doubled year over year, beating estimates by $10 million. In addition to this, they had positive ratings and increased price targets, so it's not that difficult to imagine why the share price has been increasing of late. However, it actually suffered at the hands of the tech drop last week, causing it to fall about 15%, and so what I did was to top up at this point, buying more shares. And now over the last 7 days, we've seen a nice recovery from that point. An investment management firm actually wrote an investor letter saying the company enjoys a unique place in the mobile phone ecosystem, as it's the only company embedded into the Android OS to allow for app downloading. When a business is performing this well and is said to be a unique position, it just brings out more success for this company. But yeah, we'll see if the company can continue to perform. Of course, I don't expect things to always be like this. The growth will slow down eventually, but for now, I'm just going to enjoy it. The Trade Desk is a company I don't think I've talked about before, but it went crazy on Friday after its Q3 earnings. I think there were quite a few companies actually that had double-digit percentage gains based on their earnings recently, which I found to be quite strange, but in a good way. Well, I don't know if strange is ever good, but what I'm trying to say is that it's not something I would have expected, but I'm not complaining. So Trade Desk's third quarter revenue jumped 32% year over year to $216 million. Which surpassed analyst estimates of $180 million. Their earnings per share also increased from a year ago, from 75 cents to now $1.27. And what makes it funny is that analysts on average were expecting something around an EPS of 47 cents, so they absolutely destroyed that. For the fourth quarter, they gave a guidance of revenue between $287 to $291 million, which was far and away ahead of the consensus analyst estimate of $253 million. So with those numbers, we saw Trade Desk go up a nice 40-something% this week, breaking an upward channel that has been developing since the end of February. Obviously, I'm not going to be doing any more buying of shares at this price simply because it's kind of in unknown territory at the moment, but mainly because it's not in oversold territory, which is when I do my buying. Right, so let's get on to my top losers. So Alibaba, I always get made fun of saying this company's name, man. I don't think I know how to pronounce it correctly. So they had their earnings this week. Revenue growth was basically in line with the forecast, but there were also plans for Ant Group to have their IPO, a fintech founded by Alibaba founder Jack, but this was stopped over concerning issues that might cause the company, quote unquote, not to meet the listing conditions. It was an IPO expected to be the largest ever in the world, so obviously when news came about that it was suspended, investors became a little stiff. Not stiff as in that stiff, like stiff as in shock stiff, like when you've seen something unexpected stiff, that type of stiff, okay? What was crazy about it too is that it would have made at least 18 billionaires, including early investors and employees. So now that opportunity looks to be gone for now, at least, until the situation is resolved, I guess. The only thing I fear now, well not fear, but anxious about is people saying again that Chinese companies are bookie or whatever. Like US or European companies don't get caught out for being fraudulent either. Anyway, that's why it dropped this week, as many other stocks rose, but we move. I think Alibaba is still a great addition to anyone's portfolio. They have their Singles Day coming up pretty soon, so we could see some outstanding numbers there as well. Realty Income was my second loser. They had their earnings on the 2nd of this month, in which they missed, and yeah, apart from that, no other big news around them. I'm not too bothered. Just keep paying my dividends and we're good. So yeah, that was a quick update of my portfolio this week. And as of now, we still don't know who's going to be president of the United States for the next 4 years. I don't know why they're so slow over there. Like, what's wrong with you lot? Why is it taking so long? In terms of my portfolio, I'm still trying to get rid of some stocks so I'm not over diversified. And now that most of them are in the green, I'll be looking to do that more than ever. My plans for next week? I don't really have any. Most of my stocks are not oversold at the moment. I think Kimberly-Clark is probably the only one, so if any others become oversold, I will stock up on that and build my position in that company. But let's talk about that new Bitcoin ETF, shall we? There's this new Bitcoin ETF, exchange traded product, that caught my attention this week that I'm looking to invest in place of my gold ETF that I use as a very small hedge of my portfolio. I didn't really understand how it worked. Well, obviously it's meant to track Bitcoin, but I wanted a little more information. So I found this article here, and to summarize it, it says BTCE exposes you to physical Bitcoin with the security, safety and liquidity of an ETP or ETF. So essentially it acts as any normal ETF that you can find on Trading 212. Its aim is to track the price of Bitcoin and is 100% physically backed by Bitcoin. It's approved by BaFin. Sorry if I've butchered the name of that. I feel like that needed to be said with some sort of accent, but it's a German financial regulator, and each unit of BTCE gives the holder a predefined amount of Bitcoin, similar to the way a physical gold ETF would. For every unit of BTCE owned, there is a Bitcoin held and insured in a regulated institutional grade safe custody with BitGo, which is a regulated trust and market leader in cold storage tech. And here comes, I think, the most attractive part about this ETP or ETF, whatever you want to classify it as. It removes the need to engage in the technical challenges of having a cryptocurrency wallet, setting all that up, and then going to buy Bitcoin to store it in that wallet, and having some encrypted key to keep everything safe, or mingling about with blockchain that you have zero idea about. With this ETF, or you know what, I'm just going to start calling it ETF because it is an ETF. So with this ETF, it essentially eliminates that for you. As I've mentioned, your investment is held in securities, and so it eliminates the risk of you losing your investment due to an absence of knowledge of setting everything up. So just to summarize, it acts like any ETF or share would, where you would buy it and sell it based on what you want to do with it, and you benefit from the secure mechanisms offered by a regulated exchange. If you're interested in investing in Bitcoin but were fearful about the complexity of it, then this may be something you'd like to look into a bit more. I'm without a doubt going to invest in it. I'm just waiting for a good short-term price to get into it. So right, oh yeah, I got some dividends, didn't I? 4 to be exact. I got City of London Investment Group, which I don't hold anymore, JP Morgan Chase, which I also don't hold anymore, and then I got AT&T and Verizon, which I do hold. So yeah, those are my dividends I received in the last week. Alright, cool. That was my portfolio update. I'm gonna wrap things up there, and I'll catch you guys in the next one in a bit.